Hi students, in the previous videos we have discussed about the meaning of capital gain, meaning of capital asset, what is short-term capital asset, what is long-term capital asset, what is short-term capital gain and what is long-term capital gain. We also discussed about the method of computation of capital gain. We have to compute two types of capital gain. One is short-term capital gain and the second one is long-term capital gain. I already told you short-term capital gain means any gain arised from sale of capital asset, short-term capital asset. Long-term capital gain means any gain arise from the sale of long-term capital asset. And almost the format is same for calculating short-term capital gain and long-term capital gain. The first we have to write about the consideration received, that is the sale price. When you sell the capital asset, some selling price you will get, no, that you have to write here. Here also if it is long-term capital gain also same, less expense of transfer. So once you deduct expenses from sale value, sales consideration, we will get net sales consideration. From that we have to reduce cost of acquisition and cost of improvement. In the case of long-term capital gain, we have to deduct indexed cost of acquisition and indexed cost of improvement. So once you deduct these two from net sale consideration, we will get long-term capital gain or short-term capital gain. There are certain exemptions for available for short-term capital gain and long-term capital gain, and that exemption we have to deduct to calculate taxable short-term capital gain and taxable long-term capital gain. Now we shall discuss about each and every part of this format in detail. Now we will see what is consideration received. Consideration received, that is the value of consideration. It is also called sales consideration. What it is? It is the price received. The price received by the transferor. Who is transferor here? Actually our assessee is a transferor. He receives in lieu of assets, he parts with, that means he sold. So whatever the price received, the full value of the price received by the transferor as a consideration for the asset sold, it is called value of consideration. Then the next one here in this format you can see here expense of transfer, no? So what is expenditure on transfer? It includes whole expenses in connection with the transfer of capital asset, and it is deductible from the full value of consideration. So what are the example for this type of expenditure? It includes all the expenditure necessary for transfer, like brokerage, commission, cost of stamp, registration fees for transfer of capital asset. All these will be included as a expenditure on transfer. Then the third one is cost of acquisition. What is cost of acquisition? Cost of acquisition means the value of the asset, for which the assessee purchased or his previous owner purchased. So it is called cost of acquisition. This cost of acquisition is what nature it is? Capital in nature. Understood? It is capital in nature. And it also includes, there are certain expenses which are capital in nature relating to it, purchase. So cost of acquisition is the value for which the asset is acquired by the assessee. Acquired means purchased by the assessee. And it also includes expense of capital nature for which the title are included in the cost of acquisition. Suppose a machinery is purchased by the assessee, The value for which the machinery is purchased is the cost of acquisition. It also includes installation charges. The machinery has to get fitted in the factory to make it workable, right? So that expenses is also included in the cost of acquisition. What is next? After cost of acquisition, you can see here cost of improvement, right? So now we shall discuss what is cost of improvement. Cost of improvement means all the expenses of capital nature, that is very important. It is of capital nature incurred by the assessee for making any addition, alteration or improvement to the capital asset. What do you mean by addition, alteration or improvement? The example is here. One is construction of an additional floor in a building. A building is there. It is a capital asset. Suppose the assessee construct one more room, extra room in that building or additional floor in that building. It is considered as cost of improvement. Understood? Likewise, renovation of house property, compound wall construction, borewell installation in land, major structural repairs that increase the value of the capital asset is considered as the cost of improvement. Here, one thing we should consider, only capital expenses are considered and not normal repair or maintenance expenses. So, maintenance expenses or repair expenses, if they give in the question, you cannot consider it as cost of improvement. Now, we shall discuss about one more important thing here. Here I told cost of improvement. Here, in the case of long-term capital gain, we can see here one new term, that is indexed cost of acquisition and indexed cost of improvement. So now we should know what is indexation. Indexation. We will see now what is indexation. Indexation is a benefit. It is a benefit given to the assessee for reducing the taxable gains. Understood? Primarily for non-equity assets. It does not include debenture, goodwill, intangible assets, bonus shares and depreciable asset, even it is a long-term asset. So indexation benefit is not available. Not available. You should note it. It is a benefit that help to reduce the capital gain. Capital gain if reduced, long-term capital gain if reduced, the tax will also reduce. Understand? And it is considered as adjustment for the cost of inflation. So day by day the expenditure is increasing. Okay, so to that for that purpose the cost of acquisition is should get adjusted, and we are adjusting the cost of acquisition according to the inflation using CII. CII means cost inflation index that reduce the taxable capital gain. Taxable capital gain. Which gain? Long-term capital gain. Primarily for non-equity asset. Okay. The beauty of indexation is it reduces the tax. And this indexation benefit is applicable only for long-term capital gain. That is another point to be noted. And this is based on CII, which is given by the government, by the income tax department. And this benefit is not applicable for debenture, goodwill and certain intangible assets.